Welcome back. Well, our second guest is Moil. They saw good volume growth, although prices were under pressure. The margins, though they're lower on a year-on-year basis, well, on a sequential basis, they have improved. And gradually, over the last few quarters, you've seen margins pop back up. Well, to understand more about the company, we're joined by Mr. Ajit Kumar Saxena, the Chairman and Managing Director of the company. Hi, Mr. Saxena. Good morning, and thanks so much for joining in. Well, congratulations. It's been a pretty good showing in a challenging environment. But you rarely join us, so we're looking forward to some numbers. Now, if I look at your margins, they've improved because of operational efficiencies as well. But also your employee cost is down. It's on a sequential basis and on a year-on-year basis, it's down. Could you explain that to us? Why is that? And also, for the coming year, what will the employee cost look like? Last year, it was around 570 crores. Please go ahead.
Last year, it was basically adjustment against some wage revision. So it happens once in 10 years, employees' wages were increased. So there were arrears and there were retirement payments also. So now it has come down, and I think it will be reducing by, say, 34 crores as compared to there was additional load of 34 crores last year. So it will come down. And more so, per ton, employee cost will also go down because our efficiencies are on high.
All right, so efficiencies are improving. On a per ton basis, you will see employee cost reduce. And as compared to last year's 570 crores, there will be a reduction of 35 crores for this year itself on an entire year basis. Lovely. Mr. Saxena, I just wanted to know your outlook on margins from here on, because the first quarter margins are closer to 39.5%. This is a level that we haven't seen in the last many quarters. What is a sustainable range from here? What should we work with in FY24?
FY24, you just see the steel production is on rise, and they are our major customer. So I see very good future.
But what numbers, sir, can you give us? I think we've got that chart up, and my director is going to pull that up. So it had gone to mid-teens, and then your margins are back above that 30%. So can you hold on to this margin? 30-35% should we work with for the year, sir?
Yes, definitely.
Which, 30 or 35?
Around 35.
Around 35%,
all right. Yeah. And on what volumes? What's your volume guidance for this year?
Volume, we are having good performance in Q4 of last year. We set a target of 20% plus growth for this year. So that was 1.3 was last year, and then we decided targeted production around 1.6. But again, seeing the performance of Q1 in this financial year, which is 4.36 and which is the best ever quarter since inception. So it is quite likely that we are revising our target again and maybe targeting for still higher growth.
So you're saying 20% plus sales or production volumes?
It is production as well as sales.
Okay, so both should increase by 20%.
Yes, that's what we planned. We targeted in the beginning of the year. Q1 is the best since inception, so we are going to revise our targets. It is maybe 28%, 25%. Figures are yet to come, but it would definitely be what we have targeted in the beginning of the year.
So earlier it was 20%. Now you're saying it could be in the high 20s, right? More than 25% possibly.
Yes.
So you're sounding quite confident, Mr. Saxena. So good. And shareholders, they've been waiting for many, many years. But actually the value of the company hasn't really got recognized. Though what helps you all in wobbly times is the cash you have in your books. So what is the updated cash balance? If I look at it as of March, I think it was roughly 950 to around 1,000 crores. Could you tell us what is the updated number? And how will you use it? Buyback, dividends? What is it likely to be?
900 crores still, it's there. And first quarter, if we said, then we are carrying cash more than 916 crores also. And buybacks,
Yeah. So 890 to 900 crores is the cash on your books, right?
Yeah. And
you were speaking about the buyback. Yeah, go ahead.
Yeah, if you look at the buyback, it is yet to be decided. But what I am trying to say that last year, if you see, my capex was nearly my profit after tax. And this year, we have going to have capex, around 15 to 20% more than what we had last year. So as you said, you were seeing that the company has plateaued in performance and all. So we are spending heavily on capex and increasing our capacity and so the production. We have also We are also working on exploration. That is the prime and backbone to mining industry. So last year it was almost 40,000 plus meters of exploration, which is around 2.5, 2.6% higher than the 5 years average. This year we have kept a target of 70,000 meters
Very
of
good,
exploration.
sir. Right.
And
So
it was around 20,000 plus in first quarter.
So a lot of money going to be put on exploration, and that's why your capex for this year will be 15 to 20% higher than last year. Got that point. Now everything is looking good. The promoter of the company, which is the government of India, they'll be tempted, right, to come and do an OFS or sell some stake. Do you think that's on the cards, Mr. Saxena?
Yet to be decided.
But have you heard something?
It's too early.
Too early. That means you've heard something.
No, it's too early. This is just one quarter.
All right. We won't quiz you on that a little.
One thing is for
Yes,
sure,
go ahead.
company is growing volumes, and it is not only one quarter or second quarter. It is going to be. I mean, we can think of it will be growing substantial. What you have seen for last few years, it was plateaued. Now it will be years of growth.
We understand that it's a little too early and you don't want to speak about that. Perhaps at a better time you will come and tell us what the plan of the promoter is going forward. But, just on a macro standpoint, how much of India's dependence on imports for manganese has declined? I mean, what is our current requirement? How much of it was earlier imported? And have we seen a decline in our import bill for manganese?
If I share with you last 5 years import figure, you will find that there was, in 1 year, there was a hike. Last year it was around 4.5, before that it was around 6.5, and mostly it was varying between 2.8, 3, 3.5. It was only in 21-22 that it was 6.5 million ton. But if I talk about the current figures, in Q1, last year it was 17 lakh tons, and this year it has come down to 11 lakh tons.
Okay. All right. So lower. So you're doing a better job.
So you can say there is a 33% decrease in the volume of import as compared to Q1 of
So
last year.
kudos to you and your team, Mr. Saxena, because you are ramping up production. Their reliance on imports has reduced. Good work, all the best, and we appreciate you joining us here on CNBC TV18. We're looking forward to having a chat with you in the coming quarter as well.
Thank you.
Well, on
Thank
that
you very
note,
much.
We'll slip into a short break, come back, continue our focus on markets and stock-specific action. Don't go anywhere.